The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Happy Monday to everybody. I want to thank you for joining our Monday morning webinar. My name is Tony Butler. I'm the Life Sales Director here. And today, Jason Goodrich will be here and we'll be discussing EquiTrust and some exciting news regarding single premium life and the new single premium life products that they have, or I should say reintroduction to a couple of single premium life products. Before we do that, there are a few housekeeping items I'd like to kind of go through real quick. First and foremost, um, we at IAMS understand that referrals are a big part of your business. They're also a big part of our business. So what we like to do is provide agents with a referral bonus for any agents that you do refer to IAMS and they get contracted with one of our carriers. If you do refer an agent and he or she gets contracted, we do provide you with the $50 referral bonus. Any subsequent business that they write with those carriers that they are appointed with, we do provide you with 20 basis points bonus on that as well. So that doesn't take away from the commissions they earn. That's just a little bonus to you saying thanks for referring the business over to us. If you have any questions regarding our referral bonus, please feel free to give me a call. Next, for new producers, we do have a new producer builders program. And that is if you're a new producer, meaning first 180 days of being appointed through IAMS, we do have 3 different levels for new producers. We have the 100,000, 300,000, and 500,000 level. You can pick one of these levels to try to achieve. For the 100,000, we do provide either a $750 cash bonus, a 2-year producer website, or a free iPad. If you'd like to bypass that $100,000 level and shoot for the $300,000 level, if you achieve that, we do provide either a Social Security program, which has a 3,000 piece mailing, or you can do $2,000 in marketing reimbursement dollars, or you can get the $1,500 Visa gift card. Now, if you have a lot of business you intend on writing and you do achieve that goal and you're shooting for that $500,000 level, we do one of 2 different seminar coachings with 2 of our top producers. You can either do a 5,000 piece mailing and seminar coaching with Matt Gill, or you can go for the 4,000 piece mailing and seminar coaching with Dave Pipper. Again, they're 2 of our top producers. They can provide you with valuable information to grow your business. Or if you like to treat yourself because you worked hard and wrote a lot of business, we do have the Ritz-Carlton travel package available to you. If you have any additional questions regarding our new producer builders, please give me a call. I'll be more than happy to answer any questions that you may have. Next, IAMS back office support. We have some of the best people in the business working back office for you. Couple of things that I like to mention in regards to back office support. Contracting is a huge thing and a lot of paperwork that if you've ever gotten contracted, which I'm sure you have, there's a lot of paperwork that's involved. We do offer paperless contracting for you. So once you are appointed with the carrier, any subsequent carriers you'd like to get appointed with, we do have the ability to get that submitted for you. Pretty painless process. We do offer also top sales expertise and coaching. We do have sales and resource tools available for you. So our thing is to help you work smarter, not harder. So please give us a call. We'd be more than happy to help you with any of your needs. We also have a creative marketing solutions team. That department is headed up by Jacob Tedlock, and we also have Sean Crawford, who is one of our design people with our creative team. They do provide, whether it be turnkey, agency, or digital solutions for you. So if you're looking for help with newsletters or postcards, looking to redesign your logo or actually get a logo, looking for advertising, whether it be personal website advertising, digital marketing strategies, they can help you with that. Please give Jacob or Sean a call for more information regarding our creative marketing solutions and what they can offer. Our IAMS website is a 24/7 website. We do have excellent sales tools available on the website. If you're a life agent, The website does allow you to run both term quotes as well as universal life quotes. You can obtain applications and brochures off the website. For you annuity agents, there is an annuity product grid available for you. We also have a long-term care product grid. So if you have any questions about our website or need assistance in navigating through the website, you can give us a call. The website is www.imsinc.com. We also have a retirement analyzer available for our agents. We do offer this on a 30-day trial basis. Marcus Solar, who is one of our top annuity sales director, is the product expert in regards to the retirement analyzer. Just to kind of give you an indication what that analyzer does, it can answer questions for your clients such as, can I continue my present standard of living into my retirement years? When can I retire without running out of money? And how would it affect my family if I were to die prematurely? Again, this is a 30-day free trial basis that you can use this. If you have questions regarding the retirement analyzer, Marcus would be more than happy to answer those questions. After the 30-day trial basis, we do offer the analyzer free of charge if you produce $250,000 in paid premium of annuity production or $250,000 of paid premium in single premium life. We also have an IMS Wealth Management team. I think we're going on 3 years with the Wealth Management team. It's headed up by Charles Jr. Joan Wallace and Mike Hansen also make up the IMS Wealth Management team. Now, with the Wealth Management team, they can help you as an agent with your higher net worth clients, with more investing assets, I should say. If you're looking to increase your revenue or improve client retention or strengthen client relationships, give Mike, Charles Jr., or Joan a call. They'd be more than happy to let you know what you can do in regards to that. And I believe I do have a polling question on our IMS Wealth Management team. Actually, no. My apologies. The polling question is going to be for the next slide, which is our Life and Annuity Academy. If you are familiar with IMS, you know that we do a Life and Annuity Academy. We try to do that at least once a quarter. A lot of times we will co-host with one of our top carriers. This is a 2-day training that we do pay for your travel, your lodging, and your food. And what the 2-day training includes is information on top sales ideas and strategies. We talk about wealth transfer tools, sales software tools. We do have some of our top producers that speak in regards to what's working in the industry, trends, things of that nature. So if you're interested in more information regarding our Life and Annuity Academy, I do have a polling question that I'm going to launch. If you could just respond to that, make sure to get out additional information to you. Okay, I'll leave this up here for a few more seconds because I see there's people that are responding to this. Okay, I'll go ahead and close that out. Last couple of slides here. For 2020, we have the IMS Athene Marketing Summit. This is a producer social and educational event. It will take place August 26th through the 29th of 2020. Invitational period is July 1st of this year through June 30th of 2020. If you would like more information in regards to the summit, please give us a call. If you need information on where you stand as far as production to attend the summit, we can answer those questions for you as well. And we also have for Producers Escape for 2021. The qualification period for this is July 1st of this year through December 31st of 2020. The location, I think we're getting the details on that finalized here, and we'll have that information for you guys here shortly. But if you're looking for more information in regards to that, please don't hesitate to give us a call and be more than happy to answer any questions that you have. Again, location information will be coming soon. So with that, I'm going to turn this over to Jason. Are you still there, Jason?
I'm here.
Okay. So what I'm going to do is make Mr. Goodrich the presenter, and we're going to discuss some exciting news that we have with EquiTrust. Okay, so you should have that now. I can see your screen.
I got it. Appreciate it, Tony.
Okay, thank you.
You bet. Good morning, everyone. As Tony said, my name is Jason Goodrich, and I'm the National Account Manager here with EquiTrust Life Insurance Company. First off, I'd just like to thank everyone for taking time away from your busy schedules this Monday morning to join me for an overview of the relaunch of two of the most successful single premium life products in the industry. Many of you may be familiar with the WealthMax and WealthHorizon, which we had pulled about a year and a half ago, but we just reintroduced in just the last couple of months. And we've already seen a significant ramp up of sales back into those products. I think you'll see why these products have been so popular as we go through the presentation this morning. Now, I don't want to take up too much of your time, so I'm going to try to keep this at a pretty high level and spend probably about 20-25 minutes or so just covering the products and the positioning, like I said, at a fairly high level. However, as we go through the presentation, please type in any questions you may have, and I'd be happy to address any questions anybody has at the end of the presentation. Lastly, let me just thank Tony, all the great folks over at IMS. They've been a top marketing organization with EquiTrust since the very beginning, 15 years ago for both annuities and life. We really appreciate their support and long-term partnership. With that, let's go ahead and get started. Okay, the first thing I want to do is just kind of talk about the positioning of the products, kind of where the single premium life products from EquiTrust really would fit for your clients. And really it boils down to just kind of two different positionings of the products. Number one is wealth transfer, right? So any of your clients that may have a lump sum of money sitting somewhere, that really the goal for them is to pass that on to their kids, their grandkids, their church or favorite charity, something like that. Quick example of how that would look. Here's a 60-year-old that has $100,000. If they would reposition that money into a single premium life with EquiTrust, it would give them an immediate death benefit tax-free of $195,000 for them to pass along as a wealth transfer or legacy to their heirs. Okay, so that's kind of the one most people think about, but the one people don't think about as much, and probably where we see, I would say, close to 40% of our sales with single premium life is as a way to address the need for home health care, nursing care, something along those lines. For those folks that maybe don't have adequate coverage for that, single premium life can be a great alternative in those situations. We'll talk about this more in a little bit, but same example, that 60-year-old female, that $100,000 gives them an immediate availability of $194,750 to pay for living benefits for nursing care or home health care. What that would turn into is $5,410 a month tax-free to pay for nursing care for that $100,000. Once again, I'll get into that more in a little bit, but those really are the two main positionings, either wealth transfer or as a way to address a chronic illness or home health care need down the road. Another thing I like to talk about, because I think it's different than what you see with annuities, is sources of funds. So where we see the funds coming from that go into our single premium life products. On the annuity side, as you guys are probably aware, about 70% of our business on annuities is replacement business. What I mean by that is 70% of the business is coming from either another annuity or a life insurance policy and going into an annuity with us. It's quite the opposite actually with single premium life though. Really only about 15% of the business we get into the single premium life is replacement business. So it's, we do see some from annuities and life insurance, but the majority of what we get is coming from a CD or some sort of liquid account like a savings account, checking account, money market, something like that. even a managed account. We see a fair amount of that. So the majority of the business is money a client just has sitting there, pretty liquid, in a pretty liquid position that they reposition into a single premium life. As we go through the presentation, I think you'll see why that makes sense, why it makes sense for a client to reposition from a liquid account to something like this. However, we do see annuities. So if someone has an old annuity that they just don't need, makes sense to maybe pay the taxes on the gain for that and move it to a single premium life insurance policy. And the last thing we see, and we're starting to see more of, is life insurance policies. So somebody has an old life insurance policy that for one reason or another is not doing what it needs to do for them. They can 1035 exchange it into this life insurance policy with EquiTrust. A quick example of this is a situation I dealt with just a couple of weeks ago with an agency I work with. They have a bunch of old Transamerica policies, whole life insurance policies. The problem is these policies are really old, but their client is still having to pay $60 to $80 a month into them to keep them in force. So they have some cash value, not a ton, but most of them are like $15,000 to $25,000 cash value. So we're seeing a lot of that come in here now because those clients are taking those old policies that they're having to pay into every month, 1035 and exchanging them to us and getting a paid up policy. So what they get at that point is a policy they no longer have to pay premium into, and a policy that offers a lot of benefits that those old whole life policies didn't many years ago. So, just because someone has a life insurance policy doesn't mean that it wouldn't make sense to 1035 that to a new one. So something to consider. Okay, let me talk about the underwriting a little bit, then we'll get into some of the products. Now, today we're going to be talking about two products, as I mentioned, the WealthMax and the WealthHorizon, both reintroduced. They both have exactly the same underwriting. So when I talk about this, it applies to both of them. Okay, this is simplified underwriting, point of sale decisions. Okay, standard to table 4. So what that means is if it's table 4 or better, it's approved. If it's lower than table 4, it's declined. It's declined. And almost all decisions are made on the phone. The majority of them, okay, are made on the phone. As far as the client, there's only a couple things that are going to involve the client. Number one is there are pre-qualification questions. So there are knockout questions. They're on the application, obviously, but they're also in our agent guide. And we also have a one-pager that you could pre-qualify your client with by asking these questions or by having them read through them and answer them. If they answer yes to any of those questions, they would not be a candidate for this, so you should not do the application. If they answer no to every question, then they would be a candidate, and you can proceed with the application and the phone interview at that point. Okay, so the application, obviously that involves the client, and then the phone interview. The phone interview is done point of sale. You as the producer would initiate that phone call, and there's instructions on how to do it with the application. You would hand the phone to your client, and they would just repeat the health questions on the application to the client. At that same time, they're gonna review a prescription history and an MIB history. If anything were to contradict how they answered the questions, they're going to ask about that during this phone interview. Now, the phone interview typically is only about 15 minutes. Okay, so those are the only two things that involve the client, the application and the phone interview. In those situations, are there exams or fluid draws or anything like that? Then at the end of the interview, the client will hand the phone back to you as the producer, and the interviewer will give you the approval over the phone or a decline if it is a decline. You can see on the screen here, that's for any case that's under $250,000 in premium, okay? So if it's under $250,000 in premium, you'll get the decision on the phone. There will not be APS or medical records or anything like that. Now, if the case is $250,000 or above, it's the same process. Just at the end of the interview, they're going to tell you that we are going to order and review medical records to confirm the information. EquiTrust will order and pay for those records and take care of that. Okay, so simply below 250, no APSs. 250 and above, we'll do an APS every time. And obviously, you get the decision on the phone, but we do real-time notifications too via email and stuff. So you'll get a notification in writing from us as well too, in addition to being over the phone. Okay, so that's the underwriting for both products. And the next thing that applies to both products is a living benefit rider, which I talked about a little bit earlier. This is the accelerated death benefit rider. Okay, and as I mentioned, this is, I think, about close to 40% of the driver of the sales in our cases. So it is a pretty big deal. Now, this rider is included at no cost to every policy we issue in the states where the rider is approved. So you want to check availability on that. It is in most states, though. Even states like California have it approved. So the majority of states do have this rider, but definitely check the availability on that. But assuming it's approved in your state, it's just automatically included at no cost. If they ever have to use the rider, there is a one-time charge of $250. Okay? There are 3 different triggers that would result in us paying out that benefit to the client. Okay? The first is terminal illness. Okay, that would be less than 12 months to live. If they qualify under that, we would pay them a lump sum of 95% of the death benefit tax-free. So if their death benefit's $100,000, we pay them $95,000 tax-free and the policy ends. The second trigger is nursing care confinement, which would be 90 consecutive days in a nursing care facility. If they qualify under that, they have 2 different ways they can elect to take the money at that time. The first way is they could just do a lump sum of 85% of the death benefit. Or the second way, in which the vast majority of people do, is they would take 100% of the death benefit, but over 3 years. Okay, so obviously by doing the monthly payout, the client's going to get a lot more out of that policy. And the calculation is very simple. It's just whatever the death benefit is minus $250 divided by 36 months. That's what they would get each and every month to pay for nursing care confinement. Okay, but they do have the option if they want to take a lump sum. Chronic care is the third trigger and probably the one most people are interested in. Some people refer to this as chronic illness, but with this, it is just a loss of 2 of 6 activities of daily living and expected to be permanent. Okay, so you do not need to be confined to a nursing care to qualify for this. This would fall under the home health care, for example. With this, very similar to nursing care, they get 2 options. They can either take it as a lump sum. With chronic care, it's 75%. Or once again, what most people are going to do, they're going to take 100% of the death benefit, but take it over 5 years in this case, so over 60 months. Okay, so what would happen is, if let's say they take it monthly for 5 years and in year 3 they pass away, whatever's remaining is paid in a lump sum to the beneficiary. So even if they do it monthly, ultimately them or their beneficiary will get the full death benefit out of it. Okay, and also I should mention, this is an indemnity plan. It's not a reimbursement plan, so they don't have to submit receipts or anything to us. All we need is the proof of the loss of 2 of 6 ADLs, and then we'll pay checks to the owner monthly. Okay, once again, this applies to both products, automatically included in the states where it is approved. Okay, let's get into the products now. The first product is the WealthMax bonus, and many of you on here may have heard of this product. It was probably the leading simplified issue product in the industry for quite a few years. It's a very popular product, so we're happy to kind of bring it back. So let me just kind of walk through the specs on it, and then I'll walk through a case example with you. Issue ages are 45 to 80. As I mentioned, it is a single premium product. The minimum premium will take us $10,000. The maximum is based off of face amount. So it's a $750,000 face amount maximum. So how much premium we would take really depends on how old they are and their underwriting classification. This is a paid-up guaranteed death benefit policy. So they send us the premium, and the death benefit's guaranteed, so it's not going to lapse. Obviously, unless they take out loans or something like that, it could. But assuming no loans, it won't lapse. They have a guaranteed death benefit, tax-free. It does have a 10-year declining surrender charge on it. Here's some of the additional stuff. It does have a premium bonus up front. Okay, so immediately you get a 5% premium bonus. So if they put in $100,000, their starting value is actually $105,000. And what that does is it immediately pushes their death benefit above what the guarantee is. So day one, their guaranteed death benefit is higher, their death benefit is higher than their guaranteed death benefit. Second thing is this does have a return of premium guarantee, which is a big selling point with this product. What that means is just what it says. They're guaranteed at any time to get their premium back. So once again, if they put in $100,000, 6 months down the road, something unexpected happens, they're guaranteed to get all that money back, the full $100,000. This is why when I talked earlier about source of funds, about seeing so much CD money and savings account money and stuff like that come into this product, the return of premium guarantee, gives the client the peace of mind to do that. Now, I would point out, obviously, they shouldn't be purchasing this as a liquid account. It's a life insurance policy. It's not meant to be a liquid account. So they should have emergency funds and all that addressed somewhere else. But this does give them the peace of mind if something happens that's really unexpected. They have the ability to get at it and get their money back. Okay, the product also offers some free withdrawals, right? So if they don't want to surrender and get all the money, they can take out 5% per year each year as penalty-free withdrawals. And it has lots of different crediting options. It's an index product. I'll talk about more about this in a second, but in addition to the S&P 500 strategies, it has a brand new strategy from Barclays that I'll talk about, and also has a vol control from the S&P 500 that I'll talk about. So lots of different allocation options. Okay, keep in mind too, this is life insurance. I'm not going to spend a lot of time on this, but there are fees and charges because of that. There is cost of insurance, there is a policy fee, and there is a policy expense charge. The important thing to keep in mind with the fees and the charges is these fees, these charges will never reduce the death benefit below the guaranteed death benefit, number one. And number two, it will never reduce the cash value below the return of premium. Right, so when you look at an illustration, their guaranteed cash value will never be below the premium they put into it. Okay, account options. So, and then over on the right, you'll see the illustrated rates. So we have a fixed account, obviously. We have a point-to-point cap, which is 7% currently on the S&P 500. We have a monthly average strategy, which is a participation account on the S&P 500. Which is 85% participation rate. And then we have the two new strategies that we have added to these products that are not even on our annuities currently. The first one is a one-year point-to-point par account through a Barclays strategy that I'll talk about in a second. And you'll see the participation rate's actually 110%, no cap. So on that strategy, they would get 110% of whatever it does without a cap. Then the other one is actually a vol control strategy on the S&P. Okay, it's called the S&P Mark V, and it's a point-to-point strategy with 120% participation rate. Right, so you have these two strategies, both with over 100% participation rates. And let me just kind of drill down on those a little bit more, those strategies. I'm not going to spend a lot of time on this. You can call us, call IAMS, obviously be happy to get into more detail on this. But the first one is the Barclays Focus 50. That's the one I just talked about with 110% participation rate. This is something we just rolled out. It's exclusive to EquiTrust. It's only on these two single premium life products, okay? Obviously, the goal is to get the best return you can while maintaining a 5% volatility. It's going to allocate basically between three things, okay? Number one is it's going to use the 50 lowest volatility U.S. stocks, okay? That's why it's called the Barclays Focus 50, the lowest 50 U.S. stocks for the previous month. And these stocks are going to be names you and your clients know. Obviously, the low vol stocks are the big companies like Coca-Cola, Pepsi, Procter & Gamble, Johnson & Johnson, Walmart, Waste Management, big kind of boring companies that just perform and have performed for a long time. Okay, so your clients are going to know these stocks. So it's going to allocate between that. That's going to allocate also between four different lengths of treasuries. A 2, a 5, a 10, and a 30-year treasury, a mixture of those based off of performance, of how they performed. Then lastly, cash if needed, right, to maintain the volatility, okay, which is 5%. Okay, so this is one of the strategies, and like I said, it's 110% participation rate. Just to give you an idea, it just launched at the end of May, but if you went back to the beginning of the year to see year to date how it would have performed, it's actually up over 11% year to date. And to play 110% part of that, you can see a really strong potential for return within the Barclays Focus 50. And the other one I mentioned is a vol control strategy that uses the S&P 500. Okay, it's called the S&P Mark V. This is not exclusive to EquiTrust. There are other carriers that use this on their annuities. We do not have it on the annuities yet, but we do have it on the single premium life. Very simple for a volatility control index. It's just going to allocate between equities. It uses the S&P 500 as the equity component. Commodities, it's going to use gold as the commodity, which, as you may know, is a great hedge against inflation. Then number three, it's going to use bonds. It's going to use the 10-year Treasury note. So it's just going to allocate between equities, commodities, and bonds. Okay, very simple to understand, and it's going to maintain a 5% risk control. As I mentioned a little bit ago, the participation rate on this strategy is 120%. Okay, year to date, this is up at 11.5%, so it's up quite a bit, and that's not accounting for the 120% par. And since the last year, it's up almost 14.5%. Once again, you apply 120% part of 14.5%. That's a really strong return. Right, so there is really strong performance from this S&P Mark V. Okay, so you have these two vol control, and then you also have the S&P strategies as allocation options with EquiTrust. Okay, commission. Obviously, we're going to pay you on it. Since we rolled out these products, relaunched them, we changed the commission structure and to give you more options. We still have the upfront commission, which is 8%, which is what it was when we discontinued the products. So that's still the same, 8%, 7.5% at the older ages. But we've also added 2 trail options to it, which we found to be very attractive on life insurance, and we're seeing people pick these trail options. Number 1 is an option B, which gets you some upfront and a trail. So with that, it's just 4% upfront, then a 0.75% trail on the account value on each anniversary. Okay, for as long as the policy stays in force. Second one is just a straight trail, right? And that's pretty simple. It's just 1.25% trail commission. So they get 1.25% immediately. Then on whatever the account value is, they get 1.25% on each anniversary. Keep in mind, once again, this is an index product, so you have the growth potential, which is going to result in those trail commissions continuing to go up, okay, each year. So 3 different options for commissions. Okay, so I think when you look at the WealthMax, there's really 3 key things that it's going to address for your clients. Number 1, it's going to give them that tax-free guaranteed death benefit if their goal is wealth transfer. Number 2, if they don't have adequate coverage for home health care or nursing care, it's going to help address that need through the living benefit rider. And number 3, if something changes at some point down the road, they have the peace of mind to know they can always get their money back at any time. Okay, let's walk through a quick example, then I'll touch on the other products a little bit. This is, once again, a WealthMax case example, very similar to what we see. So we have Carolyn here, who's age 60. She's got $100,000 in a CD earning 2%. Okay, her objective is just to pass this money on to her grandkids. She does have a concern for health-related expenses during her lifetime, as she doesn't have adequate coverage. We're going to give her 3 options. One is to leave the money in the CD, continue to earn that 2% rate. The other is to move it over to a MIGA, a multi-year guarantee annuity, and get a guaranteed rate of 3%. And the third option, of course, would be to purchase the WealthMax bonus life policy. So let's take a look at all 3 and see how they would perform. Now, for this example, for the CD, now we're using a 24% tax rate because obviously the CD will be taxable every year. So immediately the death benefit would be the $100,000. In 10 years, it would be $116 plus. And in 20 years, the death benefit would be almost $137,000 to the 2 grandkids. The second one is the annuity. As you know, the annuity will grow tax deferred, but in most cases, it's going to be taxable to the beneficiaries at death. So eventually they're going to have to pay that tax. So immediately, once again, it's $100,000. At 10 years, it's $126,000. And in 20 years, it's a little over $161,000 to those beneficiaries. And the third option would be the WealthMax. Obviously, with the WealthMax, you get the immediate guaranteed death benefit tax-free. So whether Carolyn were to pass away immediately, 10 years, 20 years, 30 years down the road, those 2 beneficiaries are guaranteed to get $195,000 tax-free, worst case scenario. It very possibly could be more than that, maybe much more than that because of the index on the product. Okay, one thing I'd like to mention here too is, and we're working on a supplement that will help show this, but that CD at a 2% rate would take 41 years to equal the guaranteed death benefit of the WealthMax. So if that client wants to leave it in that CD at 2%, it will take them 41 years before that CD is worth $195,000. Even with the annuity, even with it being tax deferred at 3%, it would take 27 years for that annuity to equal the $195,000, which you get immediately with the single premium life. Okay, like I said, this is something we're hoping to have a supplement for or a calculator for at some point you can show your clients. We don't have that currently, but it does really show the power of the immediate guaranteed death benefit. Okay, let's use the same example, but just assume Carolyn lives but needs some money to help pay for home health care or nursing care or terminal. Okay, so with that initial $100,000 deposit, it's going to guarantee her $185,000 tax-free to pay for terminal illness. For nursing care, it's going to guarantee her $54.09 a month for 36 months to pay for nursing care confinement. Okay, presumably tax-free if she takes it properly and uses it properly. And for home health care, that $100,000 deposit will guarantee her $32.45 a month for 5 years to pay for the chronic illness. Okay, and keep in mind, once again, if she were to pass away before it's all paid out, the remainder is paid in a lump sum to the beneficiaries. Okay, one thing I want to show you too is what you see on your screen there is a fairly new supplement we created for the illustration. Okay, so this will automatically print when you run an illustration to show your client. As you can see, it looks more like a marketing piece than it does an illustration, and we found it to be a very strong point of sale piece when meeting with your clients, all on one page. You can see up top, we call it the power of guarantees. And this is customized to the illustration that you ran for your client. So I'm using the Carolyn example here. And what it does is it shows all the guarantees within the product, all the stuff we've already talked about. I think it says guarantee in this one page 9 times, okay? So it's all about the power of the guarantees. So on the left, you see it talks about the guaranteed return of premium, right? $100,000 immediately back to her if she needs it. In the middle, it shows the monthly benefit, right? The guaranteed monthly benefit, right? For nursing care, for chronic, or for terminal, if she needs to address that, access that. And then on the right, it shows that guaranteed tax-free death benefit of $195,000. So it does a good job on one page, kind of summing everything up. And, you know, this page probably is going to probably address the need that the client has on this one page. Now, that automatically prints with every illustration. We do have another supplement. I'm going to switch pages to it right now. You maybe didn't see that, but I'm on a different screen now. And up top, you will notice it says life expectancy snapshot. So this is very similar to what I just showed you, except what this one is going to do is it's going to look at the non-guaranteed values for Carolyn at her life expectancy age. In this case, her life expectancy age is 88. Okay, now this does not automatically print with the illustration. When IMES runs an illustration for you or you run one, you'll have the opportunity to elect this supplement if you want it, okay? And it's going to do kind of what the other one did, but instead of showing the guarantees, it's going to show the non-guarantees at her life expectancy. So you can see the cash surrender value, and this one's $185,000 instead of $100,000. If we look at the living benefits, the nursing care is $65.80 instead of $54.10. The chronic illness is $39.48 instead of $32.48, I think it was, or 46. And then the death benefit is $237 instead of $195, right? So this is basically showing the potential within the product. The reason the nursing care and chronic illness are so bigger is because it's based off the current death benefit. So when we calculate that, we're using the $237 instead of the $195 you saw previously. Okay, so 2 nice supplements. One shows them worst case scenario, one shows them illustrated potential at life expectancy. Okay, that's the WealthMax bonus. Let me briefly talk about the WealthHorizon, which is the other product. Once again, it has the same underwriting as the WealthMax, has the same living benefit as the WealthMax. Many of the general specs are the same. Issue age 45 to 80 again, same premium requirements. Once again, has a 10-year surrender charge and has the guaranteed death benefit. However, what you get in exchange, well, let me back up. So with the WealthMax, obviously 2 of the big features were the premium bonus and the return of premium guarantee. With the WealthMax bonus, you do not get either one of those, your client. They do not get a premium bonus. They do not get a return of premium guarantee. However, what they get in exchange is a lot higher face amounts, so a higher death benefit, and a lot higher caps and rates, and a lot more growth potential. So the decision to them becomes what's more important: return of premium, premium bonus, or higher death benefit, higher growth potential, right? Most things about the 2 products are the same other than that. Okay, this has the same strategies, but it's going to have higher caps and rates that you'll see in a second. And although this doesn't have return of premium, it does have some liquidity through a 5% penalty-free withdrawal per year. Plus, it has the option to take out loans if needed. Once again, this will have expense charges too. Keep in mind, once again, this is a guaranteed death benefit product, so these charges will not reduce their value below their guaranteed death benefit. Okay, let's look at the caps and rates. You can see the caps and rates are much higher on this product. The point-to-point cap on this is 11%. On the WealthMax, it was 7%. So a huge difference for potential growth. The S&P 500 is 110. The Barclays strategy we talked about, instead of 110% par, they're getting 150% par with no cap. For the Mark 5, they're getting 165% par instead of 120% par with no cap. So tons and tons of growth potential, and it leads to a much higher illustrated rate too. So on the illustration, their non-guaranteed values are going to look a lot higher on the WealthHorizon, both death benefit and cash values. And as far as commission, one other difference is we do pay a little more upfront commission. So on the WealthMax, we paid 8%. On the WealthHorizon, we paid 9%. Okay, a little more since there's no return of premium. It makes it a little harder sale, but strong commission. Once again, we have the trail options on this. So the half plus 75 trail and the 1.25 trail as well. Okay, so once again, the decision for the client is what's more important, premium bonus return of premium or higher face amount, higher caps. We are working on a supplement in the illustration, which should be coming out very soon, which will put the two products side by side if you want to, and you can show your clients side by side the values so they can see at the end of the illustration which features are more important to them and make a decision based off of that. Okay, taxation, I want to mention this briefly. Most of you, I'm sure, know this, but most of these policies are MECs, modified endowment contracts. One thing I run into with that is sometimes people misunderstand what it means to be a MEC, and they assume it's going to be taxed like an annuity. It is, as far as withdrawals come out or loans, it will be taxed like an annuity. But keep in mind, even with the MEC, the death benefit is tax-free, and assuming done properly, the accelerated benefits, the living benefits, will also be tax-free. Okay, so the MEC just means it's going to be taxable if they do withdrawals or loans, and really these products are not designed for withdrawals or loans. They're really designed, like we talked about, for wealth transfer or for the chronic illness needs. Okay, I want to point out this piece we've gotten really good feedback on. It's called a show book, and it is a client-approved piece. Basically what it is just kind of an old school spiral-bound flip chart, okay? And people really like it, and it really talks about kind of the basics of using single premium life insurance for your clients and kind of breaks it down for them. We have these in many different formats. You can print it from our website, as a PDF. You can show it as a PowerPoint from our website, or we have one you can order, and you can contact IAMS, contact Tony, whoever, and we can order one to have sent to you. Okay, we just send one out because they're meant to be reused with clients. But for example, the case example I went through with Carolyn a little bit ago, it does a very similar example within this to show the client. So just a nice client piece that we get a lot of good feedback on, so I did want to point that out. And then just to wrap up, the two products, the WealthMax, the WealthHorizon, both of these are going to offer point-of-sale underwriting. Both of them are going to offer a guaranteed death benefit. Both are going to offer the accelerated benefits for chronic and nursing care, trail commission options, and the new Barclays index and the S&P Mark 5 index. Both have that. Really the difference between the two is WealthMax, you get return of premium and a premium bonus. WealthHorizon, you do not, but you get higher death benefits and higher caps. Okay. Just let me close by talking a little bit about the company strength here. If you're not familiar with EquiTrust, we are almost a $19 million company now. We've been around for over 15 years now. 97% investment grade portfolio, so very strong there. Almost 350 on the capital ratio, which, as you probably know, is a very important number. And the solvency is just under 105 as of the end of last year. And one thing I do want to point this out, because a lot of people may not be familiar with the words 50, but I think it's important to point this out because basically what the Wards 50 does is they're an independent group that goes back and looks at financial performance over the last 5 years of every health and life company. So like over 700 companies they review. Then each year they pick the top 5 based off of financial performance, or excuse me, the top 50 based off of financial performance. And for 4 years in a row, EquiTrust has been recognized as a top 50 carrier by them. And I'd encourage you, if you have a chance, to go out to their website, the Wards 50 website. If you Google it, you'll be able to easily pull that up. It lists the 50 carriers out there, and you'll notice there's some big names out there, right? So we're honored that they've chosen us 5 years in a row, and I think it says a lot about the financial stability of EquiTrust. We also have a client piece on it, if you're interested, on our website that you could show your client too, if that comes up. With that, that's all I have today. Before I pass off to Tony, I just want to thank everybody for joining this. Appreciate you if you've written EquiTrust before. If not, I hope you'll give us a look and give us a look at these single premium life products. Tony?
Yep, I'm here. Can you hear me okay?
Yep.
All right. So I was just going to turn it over for a couple of questions here real quick to see if anyone has any questions. And while you were going over this, there was a question that popped up. Are any of these products available in New York State? If so, which?
No, it's the one state we don't do business in is New York, so we don't have any annuity or life products in New York, unfortunately.
And let me see if I had any other questions.
While you're looking, the only state besides New York the product's not approved in is Montana.
Mm-hmm. Okay. Just seeing if anyone else had any questions. And it does not look like we have any additional questions. So with that, couple of things. One, if you'd like to get more information in regards to the products that we discussed, I do have a polling question for you to respond to. I'll definitely get some additional information out to you. So I'll leave that up. Okay, so I have people looking for more information, which is always good. Okay. So I'll close that one out. And then lastly, if you're not appointed with EquiTrust and you would like to get contracted with EquiTrust, I do have a polling question for that as well. And if you're looking to get appointed, I will make sure to get the necessary paperwork out to you for that. So I'll leave that up for a few moments. Okay, so we'll close that one out. Okay, well, again, I want to thank everybody for attending the webinar. As always, if you have any additional questions, feel free to give me a call. Again, my name is Tony Butler. I'm the Life Sales Director here. I can be reached at 800-255-5055, or you can shoot me an email, and that's Tony, that's Tony, at IAMSinc, that's IAMSinc.com. Thank you so much. You guys have a great week.